Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Guys, I'm looking at this weekly chart of the SPY here. You guys can see we had 3 straight weeks of green. Bulls have been in control and having a good time, I would say, these last 3 weeks. All right, this is orange line, 1 year trend line. 1 year trend line for 2023. Recaptured that back in late October around Halloween time. And then the weeks that came after, the month of November, at least the first half so far has been extremely bullish. And we broke out of this megaphone style flag pattern here. Okay? That's a breakout. We are in breakout mode, okay? But looking at the weekly chart, it did not tell the whole story here. Going to a daily chart, you guys can see this big old gap we had between Monday and Tuesday. Shout out to CPI. CPI gave us this breakaway gap, and I mentioned how that breakaway gap is bullish, and yes, it led to more upside, but man, talk about low volatility. I mean, look at this daily chart after the breakaway gap. Higher close, higher close, higher close. One directional move, but it was tough to trade. It was tough to trade day trading wise. Let me explain. So as you guys know, I had a level at 451.4 and I had a support based on a fib level at 448.7. This was Friday's price action right here. You guys can see from here, 9:30 candle to here, all the end of the day. No setup for Uncle Charles. There was no setup. I mentioned to people, if we're going to trade within this chop, it's safer to scalp. But there was no setup. It was difficult. However, around noontime, after sitting in front of my computer for hours just watching paint dry, apparently, I went to take a lunch break. Okay? I was frustrated. I went to Subway and got me a sandwich, one of my favorite sandwiches, okay, that I could put together with chicken and tomato, stuff like that. Anyways, after I took a bite of that delicious sandwich, I started thinking a little clearer, and I said to myself, Uncle Charles, you've been staring at that laptop for hours, and that damn SPY has not been doing nothing. We need to change something up when we get back after lunch. So, after lunchtime, Uncle Charles just said to himself, you know what? I'm not going to trade SPY for the rest of the afternoon. It's just chopping. I decided when I got back to lunch, I got a Tesla room, okay? Around 1:03 p.m., I wrote, both the 234.5 level and 236 level cleared here. I had a Tesla idea, trade idea, of what to do long and or short or whatever I said up here. But pretty much the one I want to talk about was, I said here, both 234.5 and 236 level cleared here, putting 238 and 240 in play, okay? And then I put no puts unless 236 or 234.5 failed as support, okay? It was 1:03 p.m. So now I'm looking at this chart. You guys know me. Uncle Charles plays the traps. False breakouts and false breakdown. This is something I've been preaching for many years now. So, after I got back from lunch, I saw we had a breakout. I alerted the group, hey, there's a breakout. But I did not play the breakout. Why? Because I played the traps. And boom! Got the breakdown of my 236 level right there. And it led to a decent move. I took most profits at 234.5 level to level. Try to leave a runner, but end of the day, it didn't go nowhere, so I just cut it. All right? Got one level to level move. When the market is chopping, if I can get at least one level to level move, I'm grateful. So when SPY is chopping, you got to adapt and look for opportunities elsewhere. Look at Tesla, NVDA. Look at one of those volatile stocks. Okay? But I tell you, I'm a SPY trader. For some weird reason, I can't explain the reason why, guys. I have no logical explanation for this. I just like trading the SPY. Okay? So hopefully, the SPY will give us some moves next week, okay? Because look at these small candles. Low volatility. If you're a day trader, sheep style trader like me, you know, we need volatility. With SPY's not giving us volatility, we got to move on to other stocks that will. But hopefully, volatility will return soon. Now, before I get to the price action, let me talk to you guys about seasonality. I haven't talked about seasonality in a while. I brought up seasonality Thursday in my Discord, but I want to talk to you guys about it in this video. As you guys can see, the red arrow, guys, this is in mid-November. Unfortunately, SPY had, you know, a tendency based on the last 20 years average of chopping. You can see on the daily chart, after CPI's gap up, that's exactly what we got. Low volatility and chop. All right. However, towards the end, like after the first half of November, towards the end, third week, fourth week of November, we start getting volatility back. You guys can see on average, there is a pullback. After the chop is over, there is a pullback. And then heading into December, there's a pop to the upside, one directional move. Now, I don't know if this is how it's going to play out. But what I do know, or I am at least confident in, is that volatility will return back to us towards the end of November. And starting next week and the week after, that's where we are, towards the end of November. All right? So I hope that gives you guys some hope that, hey, maybe the SPY will be great again for day trading, because we had a chop phase, and according to seasonality, you know, it is tracking. All right? It is tracking. So if it continues to track, maybe we'll get a pullback before an end of the year rally. But most important thing is, guys, that we follow the price action. And in order to follow the price action, we have to know the levels, know the setups, so we can trade it unbiasedly. Okay? So first off, seasonality suggests that we could get a pullback before an end of year rally. All right? Now, I'm not saying seasonality is going to be right or wrong. I can't see the future, but I can react to the present. So in real time, come Monday or Tuesday, whatever, when we get the setup, we'll know how to react. And what I mean is my levels. All right? 448.7 fib level. Okay, I got fib levels from July high down to October 23 low. You guys know this, hopefully. If you don't, now you know. 78.6 fib levels at 448.77, guys. That is still support, and that level still held multiple times this past week. If you are a bear or you want to play some type of pullback, that level is a level that must fail. 448.7. Below that, if we want to play it level to level style, I got 447.5 and 446 as the next targets below. All right. Below 446, I would favor a deeper pullback, possibly for two possibilities. Okay. First of all, below 446, I got 444 as the next target. But if it gets lower, a big possibility is that we're pulling back to back test this downtrend line, okay? And to back test the downtrend line, it would need to go down and test 441.5. All right? So 446 fail. I got 444 as a target first, and below that I got 441.5. All right? Now, if 441.5 fails, that is a big bearish warning, guys, because it could be a potential false breakout setup on a big, on the big time frame. All right? But below 441.5, bulls would have one last chance to really try to turn things around, because there is the gap at 440, all right? So it could be a textbook pullback to either retest this trend line or to fill the gap, all right? And if seasonality plays out right, one of these levels will hold that support, and then we could get more moves back to the upside. I wouldn't try to call a bottom, play the false breakdown setups, guys. All right? Now, if seasonality is wrong about the end of year rally, then those levels must fail. 441.5 and 440. If those levels fail, it's likely will not track with seasonality, at least not track 100%, and we could get a lower move down. My 1 year trend line is now around 436, 436.2 ish. All right, that could be a possible that we retest that trend line again. Obviously, below that, bears would definitely be in control, and will likely have another leg down. Not straight down, but maybe get some dead cat bounces on the way, but likely will head down lower. All right. Now, like I said, for the bear case to be possible or to even start, guys, that buy zone, aka fib level at 448.7, must fail. And if it does, I will look to short, targeted 447.5 and 446. And like I said, below 446, I would favor a much deeper pullback to either this trend line or the gap. Okay? Below the trend line and the gap, seasonality could be wrong about the rally. All right? Now, let's say we don't get a pullback. Let's say Wednesday, Thursday, and Friday's chop day were enough for the market. For whatever reason, it decides to go up higher. The level to watch is 451.4. Okay? We almost got a double top there this past week. All right, from Wednesday and Friday's high. Potential double top. To cancel that double top, 451.5 must clear. 451.4 to 0.5 zone, whatever. We can round it to 0.5 to be safer, right? 451.5 must clear to trigger more upside. Put in 453, 455, and the gap fill from August 1st at 456.5-ish. Above that, I got 458 and July's high at 459.4, all right? Upside is not possible unless 451.5 can clear and cancel that double top. All right? That's the bear case, and that's the bull case. Anything, for me, in my opinion, 451.4 and 448.7 is the chop zone. A bigger chop zone would be all the way down to 446. All right? The overall chop zone to me is 446 to 451.5. All right? We could consolidate more in that zone. I hope not, but we could. And if that does happen, I would stay in scalp mode to be safe. We have a short week coming up. Okay? We have a short week coming up, so I don't know how much action we're actually going to get this week. Hopefully we get something. But overall, 446 to 451.4 is the overall chop zone, the potential consolidation zone to build strength for the next leg, whether it's up or down. My bias, at least for the short term, as far as being bullish or bearish, it will come when this range breaks. So if it's above 451.5, I would be bull bias. Below 446, for the short term, I would be bear bias. And like I said, anything in between, consolidation, guys. Safer to just scalp or maybe check out another stock equity that has a little more volatility, better conditions to trade. Okay, guys. Triple Q, very low volatility as well. Some way, somehow managing to stay above this 2023 trend line, or 2023 trend line that I have here. Support is now at 386. If it's below 386, then it did not recapture the trend line, or it's not defending it at least. So that's a bearish sign, a bearish warning sign at least. Breakdown of 384.5 and 383 would definitely be some follow through. I would short definitely below 383 and would possibly drop lower to 381.5, 380, and 378.2-ish. That's a fib level, 378.2-ish. There is a gap all the way down to 377.2-ish. So that's a potential bounce zone or support zone if you want to think of it as that, all right? But overall, to be bearish, it needs to be below 386 and preferably break down 384.5 and 383 to trigger some puts. All right. Overall, to be bullish, it needs to stay above 386 and clear 388. We're getting some sell pressure around that zone. Not perfectly from the 388 level, but around there. It is a fib level, previous pivot high back in July. It's got to break that July high if it wants more upside, which is 388. If it does, I would go long, buy calls up to 390, take most profits there, and leave a runner. All right, that's the bull case that I have for QQQ. IWM, well, you know, we had an evening star pattern. Unfortunately, on the fourth candle, it didn't show follow through. Somehow had a gap up, all right? So if Thursday's low is a higher low, follow through needs to be made. Break above 179 to put 180.2 and 182 in play, all right? Got to break above 179 to put 180.2 and 182 in play. I will be bullish if those levels clear. Target 183.5 and 185-ish above, okay? If it's gonna be bearish, it gotta break down support as usual, and I have it at 177 and 175.5. Those are the two levels bears need to break down: 177 and 175.5. Those levels fail, I will look to short with 172-ish, 170, and 168.7-ish in play, okay, for the gap fill. Tesla, now that's the 30-minute chart how I traded Tesla, but we got to look on the bigger time frame. Look at the bigger picture here. And what is the bigger picture? It's confusing. Almost a bullish counter candle here, almost. See how where this red candle closed and then the bulls, well, the next candle, the bulls stepped up and closed close to the previous day's close. That's almost a bullish counter candlestick pattern there, almost, but not quite. One thing I will say, if I zoom out a little, is I have the 38.2 fib level at 234.26, and somehow Tesla closed just a few cents above that at 234.30. Okay, so 234.2, around the 0.2, that's support. If it could stay above 234.2, next resistance is at 236. I would look to long above 236 with 238, 240, possibly back up to 241.5 and 243-ish in play. Another test of the purple trend line would be at 245 to the 244.5 zone. All right, but like I said, to be bullish, it'll need to clear 236. All right, I'll long that. However, if it stays below 234.2-ish, not quite bullish, guys. All right, that's a little bearish, but it'll need to show follow through. 233 and 231 are support levels. Those would be the follow through. If it breaks down those support levels, I would look to short and target the lower targets. All right, below 230, I got 228 and 225.5-ish. Okay, and there is a gap fill at 224. Okay, Apple, look at these pathetic candles. Low volatility with these wicks, little to no direction. Let's see if volatility will return. All right, whether it's a nice pullback, a nice healthy pullback would be great, or maybe more upside. Anything but chop, but we'll see. Okay, I got the chop range for the short term, 191 down to 188.5, guys. All right, if it could break down 188.5, that'll put 186.5 in play, with 185 and 183 below. 183 is a fib level. All right, but it'll need to break down 188.5 to trigger some downside. Okay, now upside, I got 190 and a fib level at 191.68. If it can get some strength, some volatility strength, and break those levels, that would be bullish and put higher targets in play. 193, 195, 196.5, and 198. All right. NVDA. It's kind of basing just below this fib level. I got 1.236 fib level. It's a fib extension level. It's been basing just below it. Just below it. Got some selling pressure there, but it just keeps on coming back. I have support at 490. All right. I have support at 490. That is a level that bears need to break down to trigger a deeper sell-off. Okay, 490. Below that, I got 488.5, 487. Below that, below 47 is 485 and 483.3. This is pivot low here. Thursday's pivot low. And 482 with 480 below that. Bottom line is, to trigger more downside, that support at 490 needs to fail. Now, the level that we've been basing below that's critical is that 1.236 fib level at 495.86. All right, it closed at 492.98. All right, so there is resistance at 494 and 495.86. Those are the two levels that must clear to trigger more upside. Put in 497, 499, 501, and 502.5-ish in play. Above 502.5 is new all-time high, guys. Meta's still trying to put in a low here, it looks, okay? We had a rejection from that 1.236 fib extension level. It pulled back, bounced off the 100% fib level, which was at 320-ish. It bounced. Yes, Friday it closed a little higher. All right, so there is resistance at 335.5, 337, and once again 338.5. Look to long if these levels clear, but above 338.5 would probably give us another high up to 340, 342, 344, and 346. All right, upside sentiment, bullish sentiment is canceled if once again we break down support. Okay, 334, 332, 330, 328, possibly back down to 326. Below 326 would cancel this little bounce we had on Thursday. Well, it was a nice bounce, not a little bounce, a nice bounce. But yeah, below 326 would make me more bear biased because it would cancel this bounce that we had from last Thursday. Okay, AMD. Well, remember I mentioned this fib level that I had because I had to zoom out from all-time high for AMD down to October 2022 low. Remember I mentioned the 61.8 fib level at 122.2. And if I can zoom back in here, we recently, this was November 14th, rejected from there. And it did lead to some downside. However, you know, Thursday and Friday, AMD tried to rally, guys. Holy moly. So, that is resistant. That's critical resistant. 122-ish, 122.2. That's the level that needs to clear. 122.2. All right, if it wants more upside. Okay, I have support at 120.5. Support's at 120.5. If that level fails, again, then 119 and 117.5 is back in play. Below 117.5, that's a fib level. I would favor a deeper sell-off back to the downside. Bearish below 117.5, okay? As of right now, if it could stay above 120.5, another test of 122.2 is possible, but it'll need to break out if it wants more upside to put 124 in play. Okay, guys, let's end this with the option flow in Darkpool. I had Darkpool order at 450.17. We had a good amount of Darkpool orders, okay? So 450.17, 4.1 billion in premium, 450.75, 2.2 in billion in premium, 451.11, 1.4 billion in premium, 451.12, 2 billion in premium, 451.14, 1.4 billion in premium. Now we got all this activity in the dark pool, and yet we had so little volatility. Guys, I'm telling you, these big money players are up to something, and they're using dark pool orders to try to hide their intentions, guys. That's what dark pool's for, okay? And we could see with our own eyes that there's big money coming in, there's big activity. So I'm hoping the volatility, whatever the market makers are up to, I hope they make it play out this coming week or the next coming, the end towards the end of the month. Hopefully, fingers crossed, and we can trade the hell out of it. All right. Let's see the option flow for SPY. We'll filter for 500K premiums. Okay, so it's bearish, a little bearish. Triple Q is really bearish. IWM, nothing for IWM. That's funny. Tesla is bullish. Apple is bearish. The flows are mixed, guys. SPY is an indice. When these individual stocks are mixed like this, NVDA is bullish. That could be another reason why we get so much chop, Meta, nothing for Meta. AMD is built. Okay, AMD is bullish. All right, guys. That's all I have for today. Thank you guys so much for watching. Good luck this upcoming week. I'll definitely make another video after market for Monday. Okay? Have a great rest of your weekend, guys. Peace.